We preset the buyback price. So it's the price at which you can buy the house back. We set it at the beginning. So every single payment is set in a contract before we even put the offer down.
Whoa.
You get that contract, you review it. Everything is preset. So if you don't feel comfortable with it, there's no moving forward.
What would you set it on the 150 house? What would you preset it at? 175?
So probably for our folks, just easier to stick with, if it's a $100,000 house, generally we appreciate about 3% a year. So you can look at it, it would be about $110,000 after 3 years. So that's the buyback price.
That's so
you can
smart.
buy back at the halfway point for $105,000.
Got it. So you build that into the model that it's going to appreciate a little bit. So
they get the upside if it appreciates more.
But that's actually what's been happening in the country. So let's get into modern day. You put people into houses in 2019 in Atlanta and in Dallas, and they have, correct me if I'm wrong, gone up at least 50%.
They have a call option that's in the money for them. Yes. Yes.
Which in plain English for people who don't understand means what?
It means that the house is now worth more than what they have the right to buy it back at. So theoretically, even, if they don't want the house, that $100,000 house is now worth $150,000. They have a right to buy it at $110,000. They should buy it. They can sell it the next day and make a $40,000 spread. That is their right. And that's what we want. Now, truthfully, though, Jason, our customers are not thinking about an arbitrage game here. That is not how it works. And no one thinks about their home in that way. I mean, you're at your house now. Also, I assume your house has now become your children's source of school during COVID, your office. Right?
Yeah,
it's like family center. And so the way that you're thinking about it is, I want to make a sound financial decision and I want a place to raise my family and feel safe. Right? And so our customers are not using Divvy as a way to hedge the market.
Not yet. Not yet. But I mean, if you do your job and you taught them how to be an owner, correct me if I'm wrong, they're going to say, hey, wait, I'm an owner. I have $40,000 in profits here. I could moved an hour outside of Hotlanta to the next hot place, somewhere outside of Nashville for $100K, and I could do it again.
As I hope they will. That is it. That is the dream. We are trying to create wealth. That is the point of this.
But all you get is the landlord's spread? Is there some other secret to this business that I'm missing?
Well, that's our core business. And so the landlord spread, when you make that every month consistently for 3 years is the average term of our lease, right? That's a nice annuity of cash, right? It's cash flow that comes in. And once someone's in the house and they're fairly stable in that house, there doesn't tend to have to be a ton of work that needs to go into it. Once you have a tenant who's happy, any maintenance stuff might come up, but generally we know that's super seasonal. So ACs are going to go out right around this time of year where they're starting to use them again, right? And we know that heaters are going to go out probably in the fall, right? And so we know these timings, but outside of that, it tends to be very little work. And so you're sitting on an annuity, a cash flow stream, which is how we make the majority of our profit. Now, that's our core business. As you can imagine, we're constantly thinking about how we could expand. Most of our expansion into new services is actually not for the profit. I actually want to be very transparent about that. It's actually because we just want a better customer experience. So for example, today a customer comes, Jason, you go to our website, you apply, and we say, Jason, you're approved for a $350,000 house in Dallas. Go out shopping with your realtor. You go, Adina, I don't have a realtor. Who should I go out shopping with? Historically, we'd introduce you to a Keller Williams agent or a Century 21 or Compass or someone else, right? Just someone in our network that didn't work for Divvy. You guys go out shopping and you say, what happens when I actually want to buy back the house? What price do I pay? And that agent's like, I have no clue. We have to call Divvy, right? And that creates a pretty friction-filled customer experience for you. And so our goal is we're going to actually start to do things like build out a Divvy brokerage. Now, the goal of the brokerage, obviously, we get a commission, right? And financially, there's a benefit to that. However, the real goal of it is that it creates a more seamless customer experience, helps drive up conversion.
Got it.
So the largest single family landlord in America is a company called Invitation Homes. They own 80,000 homes. They're a $20 billion enterprise value company. So the industry, I know you're thinking this is the margin you make, but when you sit on a series of cash flows across what's even tens of thousands of homes, it ends up being a pretty profitable and large business.
And I take it, without giving that Blackstone-owned entity a hard time, but Blackstone also owns the, SeaWorld. Let's just say these folks are not doing it for charity, or they might not have as charming of a origin story as you do. They're in it for the money.
Yes.
Period. So are they? Let's leave them out so you don't have to badmouth the competitor. But is that category of folks more sharky in the sense that they're going to be more cutthroat about the cost of the rent, et cetera?
So I'd say there's a couple of things. One, most of those competitors have actually bought portfolios of homes. And so they bought these massive amounts of foreclosure homes during the crisis. And as you can imagine, foreclosure homes that are sitting there without someone living in them can get run down more quickly than someone that has an actual tenant in. So I'd say quality of the portfolio is a bit lower, a lot lower than what it is for Divvy, where our customers go out, they find the best home, the home that they want to raise their kids in. So overall, the quality of our portfolio is better, which means that our tenants are getting a better experience. They're getting a better home than they would otherwise.
You're skimming the cream of the best owners.
Well, not only that, they're picking out the home. You're picking out what home you want. You're not, and for sale inventory is always better than rental inventory. Rental inventory is just run down, right?
Yes.
And so I think that the customers get a better experience because they get to pick out the home. The home quality is better. We try our best to be, really forward thinking around things like, you don't have to worry about paying rent every month. It gets automatically pulled if you opt in from your bank account. You get an email that notifies you and a text that notifies you, hey, your rent has been paid. I mean, I even think about my own experience in San Francisco before I was a homeowner. I used to have to log onto my bank account and wire every month to my landlord, right? We want to take away all the friction and just make this a really beautiful experience that helps guide people through the path into homeownership.
Makes total sense. Except your competitors are getting all that appreciation of the homes and you're not.
They are. So we're sharing in that appreciation with our tenants who are in the house, for sure.
We get the 3%. So I guess...
We do get the 3%.
Yeah. So, and I guess I'm trying to think historically, what has historically the last 20 years looked like? Is it 3% in the markets you're in?
No, they've appreciated much more. In fact, right now, I think average home prices were up, call it 15 to 20% year over year right now. And so we're giving a ton of that upside to the customer, but that's okay, right? Our view is that if you can create a portfolio where you treat the customer right, you give them access to this, our customers end up turning over at a lower frequency. We end up cash flowing better. They take better care of the home with lower maintenance. And ultimately, our profit margin from what we can get from rental income ends up going up because we have to spend less on turns. So basically, if a customer leaves the house, basically filling that house with another rental tenant, and we have to spend less on maintenance. And so far, that bet has held very true. We make a better profit margin than any single family REIT out there because this bet is actually holding true.
In today's startup landscape, committing to security and compliance is vital for growth, and proof of your company's security posture has never been more important. As you scale, you might start to receive more SOC 2 requests from customers, and that's where Drata comes in. Drata is an advanced automation platform used by some of the world's leading chief information security officers, or CISOs. Drata will help you successfully meet requirements, support enterprise deal flow, and continually track compliance. Drata also helps customers easily prepare for and clear SOC 2 and other audits, so you can go from zero to audit ready in a matter of weeks. Need more? Take it from Philip Martin, Chief Security Officer at Coinbase. And here's his quote: "It became clear to me right away that Drata is an engineering powerhouse. The solution they've developed is well ahead of other market players. Their approach to deep native integrations provides users with the most advanced automation available." So check out Drata's 5-star reviews on G2 and see why companies like ClearClose, Smart Recruiter, and the Good Face Project work with Drata for their compliance needs. Twist listeners can get 15% off and waived implementation fees at drata.com/twist, DRATA.com/twist.